Welcome back to Explain the Charts, everyone. Today, September 13th, 2025, we're diving into an in-depth analysis of BTCUSD, a market currently buzzing with excitement. Bitcoin has just seen a significant breakout, pushing past crucial psychological and technical levels, and we'll dissect why this is happening by looking at the latest news and detailed chart data. Starting with the news, sentiment around Bitcoin has turned decidedly bullish, largely fueled by macroeconomic factors. We saw lower than expected U.S. Producer Price Index, or PPI, data released on September 10, 2025, which boosted market confidence, suggesting more room for the U.S. Federal Reserve to cut interest rates. This is typically a bullish catalyst for crypto markets, and our daily chart data for September 10th and 11th clearly reflects this positive reaction, showing strong upward movement from around $111,500 to over $115,000. All eyes are now on the U.S. Consumer Price Index, or CPI, report, which was expected later today, relative to the articles from September 11th. And the market's current trajectory suggests a positive outcome might already be priced in or anticipated. A cool CPI print could propel Bitcoin even higher, potentially towards $124,000 quickly. Furthermore, we're seeing strong institutional momentum with significant inflows into spot Bitcoin ETFs, a trend that is increasing the likelihood of BTC breaking above the $117,500 resistance level. The SEC is even proposing faster crypto ETF approvals, which could bring more institutional capital into the ecosystem. On-chain metrics also support this uptrend, with continuous outflows from exchange wallets indicating that more Bitcoin is moving into cold storage, a sign that holders expect long-term gains and reduced selling pressure. Even Bitcoin miners are accumulating at a pace not seen since 2023, which previously fueled a substantial rally. However, it's not all sunshine and rainbows, as some technical analysts warn of a potential 30% correction risk to $84,000, citing whale wallets shedding 110,000 BTC in 30 days and broader macro risks, indicating a mixed sentiment below the surface. Now, let's turn our attention to the charts, starting with the one-day time frame, encompassing the last few months of trading. Looking at the period from early August 2024, we can pinpoint a significant reversal. Notice the sharp decline on August 5, 2024, where Bitcoin plunged from around $58,100 to a low of $49,050, marking a substantial liquidation event. However, the very next day, August 6th, saw a strong rebound, followed by an impressive 11.9% surge on August 8th, closing at $61,705, indicating strong buying pressure at lower levels. Zooming out, the overall trend since May 2024 has been an impressive climb, punctuated by healthy corrections. Key resistance levels from our news analysis are $117,500 and $124,474. With Bitcoin closing yesterday, September 12, 2025, at $116,101. We are now squarely in the territory of testing that immediate $117,500 resistance. This level is crucial. A decisive break could open the path towards $124,474 and potentially even $130,000 as predicted. On the flip side, critical support levels from the news include $111,008, which was the top of a recent consolidation zone, and a more significant long-term support at the 200-day simple moving average, currently identified around $102,066, which could act as a strong floor if a deeper pullback occurs. Let's narrow our focus to the one-hour chart to understand the intraday dynamics. Over the past 48 hours, from September 11th to September 12th, the chart shows consistent upward momentum. After the positive PPI news on September 10th, Bitcoin consolidated around $113,000 to $114,000, then initiated another leg up, confirming renewed bullish sentiment. The volume on these green candles indicates strong buying interest, pushing the price higher. We can observe minor pullbacks finding quick support, a healthy sign in an uptrend, as traders are eager to buy the dip. This suggests that the market is absorbing selling pressure effectively as it approaches the overhead resistance levels. Moving to the 15-minute chart, we get an even more granular view of the immediate price action heading into today, September 13, 2025. During the late hours of September 12th, Bitcoin made a strong push from roughly $115,000 to close near $116,101. The short-term trend is undeniably bullish, with higher highs and higher lows clearly visible. We see consistent green candles with moderate to high volume during the upswings, indicating active participation from buyers. Any brief dips are met with swift buying, preventing significant retracements. This continuous upward grind on the shorter timeframes reinforces the strength of the breakout past $114,000. To recap, Bitcoin is currently trading around $116,101, right below the immediate resistance of $117,500. The short-term outlook is bullish, reinforced by positive macro data like the cooler PPI and anticipation of a favorable CPI report, alongside strong ETF inflows and minor accumulation. The likelihood of Bitcoin breaking past $117,500 and advancing towards $124,474 in the near term is moderate to high, probably around 60 to 70%, contingent on sustained buying pressure and positive macro news. If the $117,500 resistance holds, we might see a slight retest of the $111,008 support, which is likely a 30 to 40% chance in the short term. But a full reversal to $84,000 seems less probable without a major negative catalyst. Long-term, continued institutional adoption and regulatory clarity, such as faster ETF approvals and potential national Bitcoin reserves, paint a very bullish picture. Traders should closely watch the release of the CPI data and subsequent Federal Reserve comments for immediate directional cues. Also, keep an eye on exchange inflows and outflows for signs of significant whale activity, as large-scale selling could rapidly shift sentiment. Finally, remember that Bitcoin's market remains volatile, and while the current signals lean bullish, unforeseen global events or shifts in investor sentiment can always lead to rapid price changes.